Hi, we're the Finer Miners. I'm Isaiah Hennessey.
I'm Samantha Dutcyvich.
I'm Weima.
And I'm Luke Prinsen.
Our final rank was 12th and our final score was 48, and this is our Capsim presentation.
Due to the limited combined business-related knowledge of the team members at the beginning of the simulation, our team decided that it would be best to initially focus on making one product, with the possibility for new products being implemented towards the end of the simulation, depending on team confidence as well as our results in the previous rounds. The strategy that our team decided to originally implement was therefore the strategy of a niche cost leader. This strategy focuses efforts primarily into the low-tech market and seeks to gain competitive advantage through minimizing a firm's production, material, and research and development costs. A further benefit to the niche cost leader strategy was that it has higher sales volumes at lower costs, and thus it has the advantage of economies of scale. Further, pre-simulation research also revealed that the low-tech segment had lower annual growth rates as well as less variability in the optimal production or product location. Due to the fact that conditions within the low-tech segment were less variable, the team further concluded that the niche cost-leading strategy was appropriate. Towards the end of the simulation, however, as the confidence of the team rose with our expanding knowledge base and understanding of the simulation, the team decided to implement a product into the high-tech segment. At this point, we had to analyze and discuss the possibilities between being a broad cost leader and a broad differentiator based on having two products. We decided to use the broad cost-leading strategy as it looked to compete within the market based on the product's price, which we are already doing with the low-tech segment. The broad differentiator, on the other hand, looks to compete within the market on the basis of excellent product design, awareness, and accessibility. The team concluded that competing on a cost basis would be more effective due to the variability of growth and optimal placement within the high-tech segment.
We had several shortcomings in our strategic performance, resulting in less than ideal overall company performance. Our first mistake was that we failed to follow the strategies that we initially set. Our first product was priced too high for the company to be an effective niche cost leader. We attempted to keep R&D, production, and material costs low, as well as increase our automation levels in keeping with the niche cost leader strategy, though we perhaps did not change these values enough. Additionally, we failed to have a clear strategy upon expanding our company. Our strategy ended up being something in between broad differentiator and broad cost leader. R&D, production, and material costs could have been lower to allow us to price the product lower and compete as a broad cost leader, or higher to compete as a broad differentiator. Our low-tech product fit more into the broad cost leader strategy, while the high-tech product fit more into the broad differentiator strategy because of its consistently optimum positioning in the market. Finally, the team waited too long before expanding to a second product. A profit-maximizing strategy would have involved creation of a second product in year 2 or 3, and subsequent expansion in year 4 or 5. We waited to year 5 before beginning our expansion into a two-product company. We saw great improvements in business performance with the implementation of a second product. Our greatest shortcoming was arguably our inability to fix mistakes week to week. Our leverage and customer accessibility metrics were consistently bad.
Our team had some recommendations for the incoming executive. Our decision to add our second product, Air, was a good decision. However, the timing of adding our second product was not optimal. We should have added our product earlier, and therefore, if the incoming executive is planning on implementing a third product, we recommend that they implement it as soon as possible. The customers were underwhelmed by the accessibility of our products, so investing more in marketing and promotion should be a high-level priority for the incoming executive. The promotion marketing budget increase would allow for an increase in target audience, as well as an increase in awareness and desire throughout the market, and is a recommended next move. The leverage for the company was poor due to the high amount of retained earnings within our company. The incoming executive should try to reduce the amount of retained earnings by spending more on the improvement of the products in the company rather than trying to hold on to our assets.
The first key takeaway in business through the simulation is the importance of profitability within the contribution margin, which is the amount of money remaining between the sales price and the product cost. This variable was crucial to actively monitor and ensure competitiveness and profitability. In Capsim, we tested methods to try to increase this through the testing of lower material costs, raising prices, reducing labor costs, and economies of scale. Each product and verifying segments were found to react differently through these changes. We developed an understanding of the importance and fragility of the contribution margin from a business management perspective. The contribution margin needs to be increased through the balance of contributing factors that ultimately test the profitability of a company. The group developed a key understanding of the importance of fundamental business management through the Capsim simulation. In specific, we learned that improvements could have been made through investing more into the product, rather than sitting on a large amount of retained earnings, which created poor leverage. From a business perspective, it is crucial to find the balance between short-term and long-term profitability. We learned that in order to be optimally profitable, a company must manage its cash flow first and then focus on long-term income, which directly correlates to current cash. The last key takeaway about business that the group learned through the simulation was the importance of diversified or evolving strategies within the market. We learned firsthand that in order to be successful, we need to identify opportunities within the market associated through new customer acquisition or leveraging existing customers. Through Capsim, we found it hard to stay competitive in an active low-tech market segment, while there is great potential in the high-tech segment, which was realized once we broadened our strategy. To be a dominant force in the market, a company needs to become experts in each segment they participate in. Through the Capsim simulation experience and the various associated key takeaways, we have gained a better understanding of the fundamentals of business management. Thank you.